But it remains the case today that the only American car companies that have not gone bankrupt are Tesla and Ford.
Elon Musk, the new owner of Twitter and the CEO of both SpaceX and the electric vehicle manufacturer Tesla, informed Twitter's staff on Thursday that he had just traded Tesla stock to preserve Twitter. And as you can expect, many Tesla investors are unhappy about this. In fact, the Tesla stock has experienced significant volatility, as a result, reaching a 52-week low. So, what is happening to Tesla now? And just how bad is it expected to turn? Welcome to the Tesla News Hangout. Today, we are going to look at what is happening to Tesla after Elon Musk's acquisition and being the CEO of Twitter. So, stay tuned as we look into this. As what to be anticipated, Elon Musk sold some of the Tesla shares he had to contribute money toward the purchase of Twitter. And now, the present uncertainty that investors have over Musk's selling plans is one factor driving the stock to fluctuate. The price of Tesla stock has dropped by more than 30% in the last 3 months. And at least some of the decline can undoubtedly be attributed to concerns about how Elon Musk will handle the fallout from his Twitter antics and how he will finance them. Investors learned at least a portion of the solution on Tuesday evening when Musk revealed in a regulatory filing the selling of 19.5 million Tesla shares over the previous several days through 38 different transactions. The $3.95 billion in money that the CEO made from the transactions contributed significantly toward the $44 billion in cash and debt required for Musk to purchase Twitter. Musk has already sold approximately $15 billion worth of Tesla shares to raise the funds necessary to complete the acquisition. Now, when a big shareholder decides to sell their shares onto the open market, it can occasionally cause supply and demand to become unbalanced, which puts upward pressure on share prices. But still, Musk's selling may give him all of the funds he needs to finalize the Twitter purchase, which will ease the financial burden. And if this occurs, it may be beneficial for the share price of Tesla to move ahead. Nevertheless, Musk has emphasized in the past that he wants to prevent future sales, and investors are likely to continue to be cautious, at least for the time being. It's possible that extra pressure could be put on Tesla's stock due to the electric car company's decision to recall around 40,000 vehicles due to concerns that the power steering systems in those vehicles may malfunction. However, a solution to the problem may be in the form of an over-the-air software update, as reported by certain sources. But still, Tesla shareholders need more reason to anticipate that the heightened volatility will decrease in the near future. In spite of Musk's assurances, it is difficult to say with absolute certainty that there won't be any further stock transactions in the future. And Musk, who is also the CEO of SpaceX and The Boring Company, in addition to his duties as CEO of Tesla, has another distraction at his disposal in the form of Twitter at a time when the automobile manufacturer is facing macroeconomic issues. So now, long-term investors face a situation that is essentially identical to the one they faced a year ago in terms of the bull and bear arguments on Tesla. This stock is currently fairly pricey, but it has a great deal of potential for growth in the future. Nevertheless, regardless of where you think Tesla will be in 5 years, there is a substantial possibility that the recent wave of volatility will continue in the weeks and months ahead of us. Could an increase in insurance subsidies drive Tesla stock prices higher? On Tuesday, in response to a price cut that was implemented before the end of October, Tesla resumed an insurance subsidy for vehicles purchased in China through the end of the year. This move was made to boost demand, although production was increasing. To encourage customers to place orders, the electric vehicle (EV) company said that customers who buy one of its vehicles from inventory would receive an insurance subsidy of $1,100 in November. However, in December, the subsidies will be reduced to $550. As the wait periods for Tesla's electric vehicles were nearly eliminated by the end of September, the company said previously that it would provide an insurance discount of $1,000 for all of its vehicles. Since October, Tesla has made it possible to finance a vehicle with no initial payment required and access to preferential interest rates. These incentives resulted in a decrease in the prices that were charged. On October 24, Tesla announced a reduction in the true cost of the Model 3 and Model Y in China of up to 9%. After those price cuts in October, Tesla temporarily ceased giving the insurance subsidy it had begun offering in September until it brought it back on Tuesday. Despite this, the gain in quickly expanding technology businesses continued on Friday, as the economic statistics lifted shares in areas such as the electric vehicle industry, EVs. However, Rivian Automotive and Lucid Group were performing better than Tesla, now the market leader in electric automobiles. Despite shares in Lucid and Rivian increasing by roughly 5% and over 9%, respectively. Tesla stock did not grow throughout this period. Rivian and Lucid both published their profit results for the third quarter of this year this week as well. The findings were all over the place. Both continue to endure tremendous financial losses, as was anticipated before. But as a result of the increasing pre-order backlog and the rapid ramping up of manufacturing quantities, the response to Rivian's announcement was more positive than it had been previously. Lucid has declared that it still anticipates hitting its conservative manufacturing goal for 2022, although the number of reservations has decreased. The cash on hand at these two companies is rather substantial. According to Rivian's projections, its cash balance would only endure until 2025 at the earliest, while Lucid will barely make it through the fourth quarter of next year. Therefore, it's an intriguing dynamic that Tesla has lagged behind these startups while earning more than $6 billion in free cash flow in just the first 9 months of 2022. So, shareholders of Tesla are interested in knowing how much time and money Musk spends on Twitter. And if Twitter needs more cash infusions, it is reasonable to assume that he may sell additional company shares in the future, given his recent transactions. Hence, recent economic changes have encouraged investors in early-stage growth enterprises such as Lucid and Rivian. The suggestion provided by the Consumer Price Index, CPI, that inflation was lower last month is being interpreted by investors as a halt in the Federal Reserve's intentions to raise interest rates. As a result, potential costs associated with meeting future capital requirements may be reduced. The takeaway for investors is that they should consider the possibility that Tesla is offering an opportunity. Suppose Tesla's highly successful business maintains increasing at the 50% pace. In that case, if it has been doing and the stock price decreases for reasons unrelated to the company's operations, then long-term investors should aim to profit from the situation by buying Tesla shares at a discount. But it is still worrying that Musk has recruited staff from Tesla, including hundreds of engineers working on autopilot, to assist with code review and other responsibilities at Twitter. In addition, he has invited friends, investors, and subordinates from other organizations that he has co-founded to assist as well. Musk has several goals for Twitter, one of which is to reduce its reliance on advertising revenue and make Twitter Blue customers the company's primary revenue source. However, several of Tesla's most stalwart bulls have had their confidence shaken as a result of Musk's detour on Twitter. According to CNBC Pro, one brokerage firm, Wedbush Securities, removed Tesla from its list of the best stocks to own. The business has referred to Musk's Twitter transaction as a train crash calamity, stating that the celebrity CEO has harmed the brand of Tesla and put shareholders through a painful cycle due to his actions on the social media platform. In his first days in command of Twitter, Mr. Musk has adopted a strange policy, sacking half the company's staff, making claims about content moderation that are wildly contradictory, mocking celebrities, and suspending accounts that make fun of him. His demands that users pay an $8 premium for a verified Twitter Blue account have sparked concerns about the social media company's financial stability, which he revealed was losing $4 million daily. Barron's has identified the price level of $200 as an important price point for Tesla shares. Tesla's shares have continued to trade above that level despite the company having to overcome serious challenges in the past, such as COVID lockdowns, increasing financing rates, and falling consumer demand. However, dealers cautioned Barron that after the $200 level has been breached, any further negative news regarding the economy or Tesla might force the stock to drop below $180 or even $100. Fundamentally, Twitter needs to take responsibility for the drop in Tesla's share price, and Elon Musk, who now supervises both firms, also needs to take responsibility. So, what do you think about Tesla's stock price? And how soon do you think it will recover? Please leave your thoughts in the comments section below, and do not forget to subscribe to our channel Tesla News Hangout, where we talk about Elon Musk, Tesla, and SpaceX. While you're at it, hit the bell so you never miss any of our videos, as more exciting ones like this are on the way. I'll see you at the next one.